Ladies and gentlemen, we are live back in the beautiful state of Denver, Colorado. And always, I'm your host, the Prince of Investing, Prince Dice, coming all the way live from the beautiful state of Denver, Colorado. For the people that are catching the playback or the people that may be catching this over the airways, don't forget to hit the like, subscribe, comment, and share button. And drop some comments if you guys got comments about what we're going to say. But as always, I don't have a lot of time, and I definitely know you guys and girls don't have a lot of time, so we're going to jump straight into it. So today we have another great episode. We're going to be talking about the 10-year anniversary of the market crash. So, you know, the last market crash we had was in 2008, and plus 2008 plus 10 is 2018. So here we are in 2018. We're going to talk about, hey, what did we learn from there? How we rebounded, all that other great stuff that has happened, what has spurred the growth, what has sprouted the growth, or whatever word I'm probably using incorrectly. But what started this growth? And then again, we got to ask, you know, everything like they say, history will always what? Repeat itself. So we're going to talk about a lot of great things. But as always, I have to bring one of our loyals to the show, Uncle James. You guys already know him. If you follow the show, you've seen him plenty of times. He needs no introduction. He's a Wall Street veteran, been on Wall Street for, I think, since the 70s. He does Wall Street tours. He was a retired investment advisor for about 40 years there, and all type of great. So just a wealth of knowledge. You got a little gray hair on the side. You know, people I like to hang around, learn a lot of stuff. Without further ado, let me introduce my special guest today. How you doing today, James?
How are you? Glad to be back, as always.
Definitely, we're definitely glad to have you back. So what have you been up to?
Oh, I've been thinking. The 10-year anniversary of the 2008 financial crisis, you know, makes you do a lot of sort of rethinking and reformulating maybe things you thought, and you know, I think for one, like sometimes people, especially younger people, ask me like, what do we care about what happened 10 years ago? And I mentioned this a little bit the last time I was on your show. Things have a tendency to repeat themselves. So, well, the next crisis may not be exactly the same. We can learn a lot by studying previous crises. And if we study 2008, it will give you a leg up when you start to see similar signs. Now, the facts will be different, but kind of the over speculation, the over investment, you start making so much money in one area that it doesn't pay to not be out of that area, things like that. You might see those things coming if you're more aware of it.
Now, James, I got a question for you real quick. I got to ask you this question. Do you think the market is overvalued right now? This is 10 years, the longest running bull we've had. Do you think the market is overvalued?
No.
What's going on?
No, not at all. Not at all. Not even close. I think the last time I was on here, I don't know if I was clear, but I mean, first of all, you know, there's some people who always argue, is the glass half full or half empty? I'm one of those guys that when I have a glass, I just ask for another one. I'm ready. Like just keep pouring. Don't stop. I'll tell you when to stop. Like, so I'm one of those. So I'm like the I was born a broker. I'm a salesman. So, you know, the stock market crashes, I'm like, buy an opportunity. You know, it's like a minor correction. Yeah, we were down 500 points. You know, it's like but the way I look at it is I think, you know, you got to look at old things. And one of the things you're going to find is if you do start to study the past with the stock market, both the good and the bad things, you may see some of these things coming a little bit before other people, but you're probably going to realize, like, there's that old expression. It says, you know, if you don't study the past, you're doomed to repeat it. But what you'll learn on Wall Street is that if you do study the past, you're doomed to watch everyone else repeat it, and there's nothing you can do about it. So that's one. For me, I would say, given I think we're about to leg up into another really big Super Bowl market. I think we're going to go back into an 82 to sort of like 99 kind of market again. Um, I'm not so impressed with the moves over the last 10 years, maybe more the moves in the last 2 years I was more impressed with. Um, but I still think we're just getting going. Like, I think the last time I was on, or I've mentioned this before, that I feel like we're in that sort of like the late 82 cycle, like just before the market was really going to take off. And
Now, James,
we've laid a lot of groundwork.
now,
Go
one
ahead.
of the key, I didn't mean to cut you off there, but I remember you saying this
Oh,
before. You know, you were one of the people that you came on right before the election. And, you know, Trump has been in office now for 2 years, and, you know, we known each other now for a couple of years. And
mhm.
I thought the market was going to go down. I was like, okay, you know, market's been up for 8 years. It was a nice run. We got a new president. Market's about to take a nice little dip, a well-deserved and due time dip. But as you see, Trump has placed hedge fund managers that were very bearish in the markets out of business. What is spurring
Yeah.
this growth? And we're at 10 years, and you're telling me that, hey, we haven't even seen anything yet?
Right. Well, listen, your buddies down there, you're from Georgia originally, I think I
Yep.
remember you saying.
Yep, I'm from Georgia.
Your buddies at the Atlanta Fed think the GDP is going to grow at 4.7% next quarter, which is, that's starting to get like sort of third world like growth rates. You're
Mm.
starting to really whoop it up here. And I think you got to remember, we had an enormous corporate tax cut. And
Oh, yeah?
some of you, I'm sure a lot of your listeners are aware of price to earnings ratios.
Mm.
Well, if the earnings have suddenly increased 30% on every stock, I don't think the stock market is up 30% from that tax cut. I also think with new renegotiated trade opportunities for U.S. businesses, I think that's going to be a huge boom to the economy. I totally agree with Mr. Trump. While I'm not a fan of trade wars or of a lot of tariffs, I do think you have to be bold, and we've negotiated for many years, probably the last 40. I would say disadvantaged trade agreements with our trading partners, and it's time to even up a little bit. And I think also a lot of our trading partners need to pay their end. They have to step up.
Mm.
They can't expect us to pay for their security in Europe. I just think there's a lot of things going on that needed to be done. You may not like our current president, you may not like his style, you may not like what he's doing, but a lot of these things are necessary, and it's time. And he has kind of the personality to do it. I think he's in that way. He's very much a New Yorker, and a New Yorker has a certain, I think, mentality that's far different than a lot of other people from other places in the world.
Okay.
Most New Yorkers is like a can-do attitude. Like it's not a matter of Democrat, Republican, right or left, good or bad. It's, we need to get this done because we need to make money. And like that's kind of the New York is like the hustle attitude. Like we have to do this better. We need to do things better. So I think, given a lot of the things going on, well, there's probably going to be an awful lot of volatility, much more than in the previous 10 years.
Mm.
Um, I think that we're sort of setting the stage for I would say, a very significant market rally, and I would not be surprised to see it, I don't know, significantly higher than now. If we have this conversation like 5 years from now, we'll be and you'll say the same thing. I can't believe it went up this much. And a lot of your readers are going to say the same, because I run into people all the time. They're like, I watch CNBC. They say the market's going to crash. It's the end of the world. I'm selling everything. It's it. And I'm like, no. I'm like, that's reason to buy. I'm buying. It's like, you tell me that, I'm buying. As long as they're negative, as long as I keep reading negative stuff in the paper, that makes me more and more positive every day.
Now, James, I have to ask you this question too. Like you just said, you feel as though the market is very bullish at this time, and that we haven't seen anything yet. What have we learned from 2008, 2007? You know, right now we're living in very low interest rates. Interest rates are slowly starting to climb, right?
Right.
We've been in this bull market. Trump just did a big tax reform. We got tariffs.
Right.
We got tariffs going on. All these other great things like that. what have we learned from 2008? Are we getting to this point to where we're just getting too much euphoria and like, oh, everything's going to be fine, everything is going great? What can we say? Hey, this happened in 2008, 10 years ago, that we must learn now to go forward.
All right. Well, this is the key. I have three basic takeaways that I look at 2008. The first is Dodd-Frank, which was the overall banking regulation that was sort of installed after the crisis. Most people would, it was during the Obama administration, but it was actually worked on during the previous administration. And I think the reality was, in some ways, Dodd-Frank was in some ways a failure, but I think it really was not meant to fix anything. It was meant to stop things from getting worse and kind of just shore everything up and kind of focus and calm everybody down and say, hey, this isn't going to get any worse. We're going to sort of put everything in suspended animation, like put it all on ice. Now, the Trump administration has come in, and what have they done? They've repealed Dodd-Frank because it really didn't work. And now they're reworking and trying to restructure, and what I would say is rebuild the credibility of capital markets. Because most people, because of 2008, have a really low regard for Wall Street. They don't really trust the stock market, which are all bullish indicators, by the way, for buying stocks. They don't really trust anybody. And the Trump administration, and maybe after him, it's going to be the same thing. We need to clean up the mess. If you notice, there's been an awful lot of fines lately that have a lot more to do with 2008 than they do with 2018 for big banks and things like that. And other financial institutions. This is part of cleaning up the mess from 2008, and it's going to take a long time to clean up this mess. It is a big mess. Then the final piece of this whole thing is, because of Dodd-Frank, Wall Street was also put in suspended animation, and Wall Street has kind of been in what I would call a big sleep. And in the meantime, for the last 10 years, while Wall Street has kind of been sort of off, like kind of put to the side a little bit and kind of hovering and just kept with the status quo, there's all kinds of new technological innovations that have come along. I would say particularly blockchain is like a new technology. And I think a lot of Wall Street firms are waking up into the Trump era with new deregulation and maybe a more competitive marketplace. And they're all of a sudden sitting there going, wow, how is blockchain going to affect our business? What are we going to do now? How are we going to make money? What is the Wall Street business anymore? You don't call your broker anymore. Everybody does stuff online. What does that mean for us? How do we distribute an IPO? How do we make sure we get enough shares out there? How do we run investment banking in the era of blockchain? How do we trade stocks? I think all these things are starting to work, and I think the business is almost going through a rebirth. And it's trying to rebuild itself, and I would say a lot of things we don't know right now is because nobody on Wall Street knows either. Nobody has figured anything out yet, or at least they're not saying, or they're trying to figure things out. And so there's that's going on. So you have those three issues. Now, on top of this, you have this, like I keep harping on this, but this very negative tone from the media about everything. And I think that as long as the media stays so negative, and there's a major distrust in Wall Street and distrust in financial institutions, I think those are all really bullish signs for the market.
You brought up a very interesting point. Like, you spoke about blockchain. Blockchain is the technology behind Bitcoin, the cryptocurrencies. You remember last fall, Bitcoin went up to like 19,000, 20,000 $20,000 worth or whatnot. And now we're sitting around 6,000 ever since. And you spoke about, hey, blockchain is kind of coming in and reorganizing business. What do you think Bitcoin and cryptocurrencies fit in all of this debacle?
Well, I think that Bitcoin, I think the biggest problem with blockchain is the association with cryptocurrencies. I think cryptocurrencies are like a sideshow. I don't buy the whole thing. I know a lot of people are going to want to kill me, and I know the first time I was on here, I called it Bitcoin, and they got all mad at me. But I still think the whole thing. Blockchain is cool though. The idea of having untamperable database where data is all linked together, bridges the trust gap between you and me. And in essence, if you think about how Wall Street was created, how was Wall Street created? Wall Street was created because a guy like you was in Denver, Colorado, and owned a piece of paper that said you owned 100 shares of Microsoft, and a guy like me was sitting here in New Jersey with money wanting to buy those shares. You didn't know if I had the money, and I didn't know if you really had the stock. So that's our problem. We have this huge trust gap. So Wall Street was created, and Wall Street and big firms like Merrill Lynch and through all the settlement process, and I'm just using them as an example. Merrill Lynch said, "Hey, that guy does have the 100 shares out there in Colorado," and what Merrill Lynch would tell you, that guy in New Jersey has enough money to buy that stock, and they would connect those pieces of paper with the money, and you would end up with the cash, and I would end up with the stock certificate. Maybe it would just be electronic in the form of an account statement, but I would end up with and that's how it's done. Now, blockchain is a way to do that almost with eliminating almost all the human element out of there. And blockchain is going to impact real estate. What is one of the biggest problems with mortgages? When you do title searches miss stuff. I had a closing in New York City that when they did a title search in the late 1990s, they uncovered things that they had missed the last time the place was sold in the 1960s.
Wow.
So suddenly we had some old debt on there from like 1947 from a bank that had been out of business for 30 years. That's got paid off but was never closed out. And we actually did. It took like an extra 3 weeks, but it got fixed. And now because of blockchain, you can control the titles. And frankly, this is one of the biggest messes left over from 2008. You have a mess with titles. You have a mess with who really holds the mortgage to certain properties. You have a lot of confusion in the whole mortgage market. It's just totally it's totally lost all credibility. People just don't believe anything anymore because of all the stuff that happened in 2008. And I think blockchain is a bridge, but I think this whole cryptocurrency thing, like, it may work out and it might be something interesting or something to speculate with, but this whole thing is just a big sideshow, kind of almost obfuscating all the settlement, the valuable ability of blockchain to facilitate all kinds of settlement, stock settlement, real estate settlement, all those kind of things, money transfer settlements, things like that blockchain works really well for. And I think while we're busy talking about cryptocurrencies, which really are, like I told you the first time I was on the show, what happens if the internet goes offline for 6 days? Where's your Bitcoin then, buddy? let me see you spend it. And you really think the Federal Reserve is going to let you start your own currency? Good luck with that. I guess you've never had a run-in with the IRS or anything, and you find out how they can be really mean. You'd be amazed how mean they can be. They can do all kinds of stuff. They can go right into your bank account and take all your money, and you don't even know about it.
Okay. I want to get into it. That was very interesting what you were saying about the cryptocurrencies, about, hey, if you think the government is going to let you just start your own currency and have your own currency or whatnot. But the idea that we are in a phase now to where, cryptocurrency is kind of, you never know. One day it can just take off. Another day it can just go down. You don't know what's going on with that market right now. But what are the, so I'm assuming James is not invested into any cryptocurrency. We want to know, since you know this is going to be
I'll tell you a little story.
Okay, about that. Go ahead.
Using my Wall Street smarts, I did play around a little bit, very small, just to fool around with it because everybody was. And what I noticed was one night I went to a sort of a local dive bar, and on a Tuesday night, which would be like tonight, they have like $2 beers. So I go there and have a couple of beers, and it's real close to where I live, so probably I could actually walk there if I really wanted to. So if I had too much to drink, I can walk home. It's no big deal, and then just get my car in the morning. Like it's a safe place to go. If I decide to drink too much, it would be a place I could get to and get back from easily and not endanger anybody in the world. And so I went over there, and like all of a sudden I noticed that my favorite bartender, who I go to, had a button on that said, I'm a cryptocurrency expert. Ask me any questions. And I immediately went home and sold everything I had. And it was about 19,000 or something. It was just before it hit the high.
Wow.
And then it peaked out, and it's never gone since. And that was the old, that was that, you might have heard, or I'm sure maybe a lot of your listeners have heard that old story about, Joe Kennedy with the shoe shine guy. Actually, there's another guy, I think it was Bernard Baruch, who actually had this.
James,
He called it the taxi driver rule.
I want you to share that story, the shoe shine guy.
Oh,
so people who never heard it.
The old story, the legend, now how true or not true, I'm not sure. The legend was about a month before the 1929 stock market crash, Joe Kennedy was getting his shoe shine, and the shoe shine guy was very insistent in making a bunch of stock recommendations to Joe Kennedy. Kennedy went back to his office. He called his stockbroker, the guy named Charlie Hayden, and Charlie Hayden and him agreed to sell everything in Kennedy's position. They sold out everything, and a month later, the stock market crashed, or maybe a little less than a month later, the stock market crashed. And around the same time, there was a gentleman named Bernard Baruch, who was sort of a famous financier. I think out of New York, most people have never heard of him. And he wrote a thing called the taxi driver rule. And he had noted that his own cleaning lady in his apartment on Fifth Avenue, in his very posh apartment, every 5 minutes was running to her phone calling her broker. And he thought, well, if my cleaning lady is calling her broker all the time, I think the market's probably a little overvalued. So he used that as his thing, and it's the same kind of idea. And I speak that way when I mention the media all the time. I just, they're just kind of they're like the voice of, I don't know what it is. They're like always wrong about everything. And it's mind-boggling because, like we always say, even a broken clock is right twice a day, and a lot of these people in the media, they don't even get it right twice a day. They're never right. Like it's like you got to work at it, like, to be wrong that much. And this is the kind of stuff. I do think, however, you might be able to draw some parallels with some of these cryptocurrencies. Before we had centralized banking like we have now, a lot of banks used to have their own gold and gold reserves. And we used to have what they used to call a free banking system. And the banks would kind of compete against each other, and the banks that were more sound and better run would attract a lot more depositors because they were better banks, and the ones who had more capital to lend and things like that. And so in some ways, you could argue that some of these cryptocurrencies are kind of reforming that old sort of free banking system where they're actually competing against each other to establish sort of new reserve currencies. But I just think the whole thing is one big sideshow from blockchain, and blockchain is where people should be focusing. They should focus on the technology and all the other things that it makes it, like, amazingly available now.
James, that you just said that, hey, you should be focusing in blockchain. You're not a fan of cryptocurrencies. Dodd-Frank got repealed. What else is James focusing on in this type of market? What are you looking for? Because since the market is so, people believe it, some people believe it's overvalued. What are some nuggets, or what are some things that you can find some needles in the haystack, or what are some industries you're looking forward to?
Ooh, now you're digging down into the.
Yeah, I'm digging down into. I want to see people to say,
Well, I have to say, there's a lot of interesting stuff that goes on in biotech right now, and there seems to be an enormous lag for, like, in investors, for when a biotech company announces a drug that may work, and it gets disseminated to the public space. So, for example, about, I don't know, 3 or 4 months ago, maybe it was even longer, a company called Biogen announced a bunch of trials that they did with an Alzheimer's drug that actually seemed to work exceptionally well. They put out a huge press release, and of course, nothing at all happened to the stock for probably almost 3 months. And then all of a sudden, it gets picked up by a bunch of Wall Street analysts almost right off the press release. They announced the success of this big trial, and the stock shoots up about $72 a share in one day. Now, mind you, it's like a $300 stock, but it was like a huge gain in one day. But there was a big lag from when that information was available to the public. Now, biotechs are a very weird thing to trade because they don't trade on earnings. They trade on what we used to call hopey hopey.
Hopey,
In
hopey.
other words, right. In other words, we hope this thing is going to work out, and if it doesn't, we're dead. That's because if it doesn't work out, you lose all your money. So it's a very, and generally you're like a chicken with an egg on these things. You buy them and you just sit on it, and you hope, and you hope, and you hope, and then they make an announcement, and if it works, the stock shoots up, and usually if you're smart, you sell it right away.
Now I had a question, James. We've seen this exact same thing happen right now with a company called Tilray. Tilray is this marijuana company from it's 52. It's a 52-week high and low. It's like 1,500%. Thing is up 1,500%. But when I look at the finances of this company, it has no PE ratio, no earnings. Right. It's still losing money. Why is this stock trading up to $150?
Because right now there's this, for one, countries like Canada, our northern neighbor, I think have somewhat legalized smoking marijuana to a certain degree. A lot of states, including New Jersey, are talking about legalizing it because they want to tax it. And a lot of people are looking at this as the beginning of a new industry. The big problem I have with all this is at the moment the federal government still seems to be predominantly against this idea, and I'm still not sure how this all is going to work. I do think it could turn into something just like the tobacco business and be the same thing, and they package marijuana and you buy a pack of marijuana cigarettes or whatever. The downside is, once again, we are smoking something, and we've been told that smoking things are no good for us for a long time. And I think, obviously you're in Colorado, so Colorado is like sort of on the cutting edge of this stuff. They kind of legalized it for a while, and it's become a really big business. And they've actually, a lot of the states like this because they think they're going to get a lot of new tax revenues out of it. Okay. So I do think that's an interesting place. Right now, I would bet the business is very fragmented, and also because it's a very I hate to say it, but the drug business is a dangerous business. And if you are even in a place like Colorado and you have some, pot field in your backyard and you're about to sort of pick up, and collect cut your plants, like bring in your crop, you could be robbed by a bunch of guys with machine guns that night, and they could rob it all from you. Or if you sell it all, they could stick you up and take all the cash from you. Because you have a lot of problems now, because a lot of banks, for example, don't want to extend credit or let you open bank accounts because you're a quote unquote drug dealer. Wow. And you have a lot of sort of choke points in the system yet. Okay. And I think a lot of that stuff, like if banks aren't going to let a sort of a marijuana farm open a bank account, I'm not really sure how an investor is going to make money off that. Like there needs to be a lot of the infrastructure to handle this business, yet it doesn't seem to be in place for whatever reason, whether it's still a leftover from 2008, which wouldn't surprise me, or it's just this idea that the federal government still predominantly feels this is a drug, this is illegal, and it's going to stay that way. Wow. I would say our current president, coming from New York City, is probably going to be far more open-minded about this than, I haven't really heard him say too much on the issue. He's very much against drugs and drinking and stuff like that, because that's just his personal thing. I don't think he's against it, but he doesn't partake himself. Coming from New York City, which is kind of a very sort of socially libertarian place where people kind of, go there to live alternative lifestyles, let's just say, for lack of a better word. I would think that he might, as a business person, he may see some huge opportunities in this thing. Mm-hmm. However, his current attorney general is kind of dead set against it. And the problem I have too is you have this enormous opioid crisis right now in the United States. You have a massive amount of drug use, which is now, it's a crisis now because it's spilled out into the suburbs. When it used to just be in the inner cities, then it was a different story, but now it's like everywhere. And it's affecting a lot of people. And I think a lot of people are looking at this and saying, yeah, tax revenue is great, but here we are, we have all these kids on drugs already. We're gonna allow another drug to be like legal. Like, how is that gonna help anybody? That it just seems to me like it's just gonna make things even worse than they already are. But maybe not. I don't know. There's a lot of weird arguments going on now because a lot of people will point at prohibition and go, look, because of prohibition, that's how organized crime got very wealthy, because they sold booze when no one else would sell it. Now, and so go ahead.
Because we got to get out of here. We run out of our time again. Time flies when we having fun. But
absolutely,
from everything that we covered, we covered about the Dodd-Frank, how Dodd-Frank got repealed. How James is saying, hey, I think we haven't even seen anything with the bull market. Also talking about the biotech industry, the crypto industry, the blockchain, and the problems it can solve, and the ways we can invest, and the lessons we learned from 2010. Is there anything? What do you want to leave people with before we get out of here?
Oh, once again, and I've harped on this the last time I was on the show quite a bit. Make a plan, stick with it. The world's not going to end tomorrow. I mean, it might, but chances of that happening are close to nothing. Mm-hmm. Just like I said the last time I was on, you could die tomorrow just by some weird thing could happen. But you can't live your life like thinking you're going to die tomorrow. You got to just live your life, right? Mm-hmm. And I think the same goes for most people for investing. For most novice investors, make a plan, put so much away, and just do it. And don't worry about all this other stuff. Mm-hmm. And just ride it. And be grateful if you live during a Super Bowl market, or if you get a second chance at it, which I think we're going to have here. It's like, just be grateful when it happens. Don't think you made a lot of money because you're smart. It's just it was a really good market. And the same when you don't make a lot of money, it's not because you're dumb. It's just because sometimes the market just stinks. And it's like, it's just get out there and do it.
Okay. Now, James, what do you want to leave people? I know you do a lot of tours on Wall Street as well. Tell people if they're in New York City, about what you're doing up there in New York on Wall Street.
Oh yeah, I do. I worked in the financial district for way too long, and and a lot of my friends who know me from the business always go, "Yeah, you're a great tour guide because you've been fired from every single building down there." Like it's. That's how they know me. They know I've gotten kicked out of every building on Wall Street and all around there on Broad Street and Broadway and all those buildings, right? So I would say if you're in New York and you have a chance, I work for a company called Wallstreet Experience. It's a lot of fun. I love doing the tours. It's a way for me to share a lot of this information that I know from all these years. We do one on the financial crisis from 2008 and another one, which is kind of like a short, fun one called the Wall Street Insider Tour. And it's just kind of a lot of background about how Wall Street started, where it all came from, the whole attitude down there. And I think those of you I think for somebody who wants to really learn about the business, it's a great first step to just go down there and take the tour and see where Goldman Sachs is and where the old Lehman Brothers headquarters was and where this all came from and who Robert Fulton is and where the house of, what about JP Morgan and learn about all these things. I really think it's something you don't get enough of in school. And this is hands-on because you're right there. You can see the building. You can touch it with your own hands. You can see Alexander Hamilton's grave. You can go to Trinity Church, which is in the movie National Treasure. You can do all those kind of things, and it's all right downtown, and it's very exciting. And I would invite anybody who's in the city to come down, even if finance isn't your main thing. You just want to see a different part of New York. It's really I make it a lot of fun, and it's a great tour.
All right. Well, ladies and gentlemen, there we go. We have it. My name is Prince Dykes. This is the Prince of Investing Show. As always, it's great to hear from James. But until the next video, podcast, cartoon, book, or whatever else crazy you see me do crazy around the globe, peace, be safe, I'm out, and thank you.